going to be looking at chart patterns. And when we talk about chart patterns, we are just looking at recognizable pattern that price is actually forming on the chart. It's not a new thing to us. So one of the first chart patterns I want us to look at is flag. Now when we talk about flag, they are of two types. You can have a bearish flag and you can have a bullish flag. Now, what is important to know about either a bearish flag or a bullish flag is your ability to recognize them on the chart. Okay, so this is how a bear. I'm going to draw the two of them together. Suppose you are in a bullish trend. Remember the first thing you need to do when doing any analysis, ensure you determine your market trend. Suppose you're in a bullish trend and then suddenly you see the market creating something like this. Now, this is a bullish market, and this characteristic you see here, this substructure you're seeing is in form of a flag. And what type of flag is this? It's actually a bullish flag. So you will recognize it by drawing both the upper resistance and the lower support. Okay. So now when you draw it like this, the question is you've been able to identify that what this is a bullish flag and the original direction of the market or the overall trend of the market is actually a bullish market. Okay. Now, how do you find entry when you have something like this? How do you find entry when you have something like this? There are two ways to actually enter a trade when you are trading a flag. Number one is either you catch it from this very bottom here, and for you to catch it from this very bottom, you have to ensure that it is either in alignment with a particular support level. Then you wait for candlestick confirmation about this. In the last class we had, I made reference to confluence trading, and I said when you have multiple reasons why you want to take a trade. Now, this this if you are making an entry for this, your reasons are going to be number one, overall trend. If you are making an entry for a buy, the reasons are the overall trend of this market is actually bullish. That is one. Secondly, the market is currently on a support level. That is a previous point where the market has reversed from. Then another reason, the third reason is that the market is also at a particular support level of a bullish flag. So you can see that you actually have like three reasons. So the fourth reason you want to look at could either be your candlestick confirmation. So when you have your candlestick confirmation, basically your rejection candlestick, this is what I recommend most times. You can enter from here. But in a situation where you are not able to make this entry, and then the second point you can find entry is for you to wait for the break of this channel. Once you break out, you wait for the retest of either the broken structure or the retest of the channel, and then you make an entry. So this is what I mean by retest of the broken structure. You can actually wait for this point. You can see that this particular point is in confluence with what a support level. Also, you can also be patient for the market to still pull all the way to this particular level, which is also a retest, and then you take your entry from there. So this is basically how you can actually trade a bullish flag. The same thing is applicable to bearish flag. Bearish flag, you have something like this. You see the market having this. That is after you must have seen that the market is in a bearish trade, and then you have this. So what you want to do is you have to identify the upper and lower support. Okay. So what you want to do is you wait for the market to make that third touch. Wait for the market to make the third touch on this particular resistance. Once the market comes to this particular point, especially when the point is in a confluence with a support level, it is time for you to actually make an entry from here and ride it all the way down. And in a situation where you are not able to do that, you can wait for the market to break out of the channel or flag, and then wait for the market to retest any resistance level and then make another entry and ride it all the way down. Okay, so this is basically how you can actually trade your flag. Okay, so another chart pattern I want to talk about is inverse head and shoulder. I'm not going to exhaust all, I'll just list some of them and then we'll look at the application. Inverse head and shoulder. So how does it look like? I make reference to it in the previous class though. It looks like this. This is inverse head and shoulder. This is inverse head and shoulder. Okay, this is the head. These are the two shoulder. So how do you trade this type of, how do you make entry or how do you apply this in your trading? When you notice this type of pattern, what you want to do is, this is a reversal candlestick pattern, all right? So you want to see this type of pattern on a support level so that you can actually make an entry for a buy. It's a chart pattern that telling you that markets may likely take a buy move from that particular zone. So what you do is you wait for the market to actually retest this. They call this particular region, they call it the neck region. Okay, you wait for the market to retest the neck region like this, and then you find an entry to your potential TP level. Meanwhile, it is important that you don't just open your chart and start looking for chart pattern to trade. The first thing is identify the market trend. Very, very important. So that is that about inverse head and shoulder. The next one is head and shoulder pattern. They are just ways and opposite. Head and shoulder pattern is like the opposite of inverse head and shoulder. So you have something like this. Okay, so this is the neck region. This is the neck region here. So to trade this, all you just need to do is when you identify it, ensure that you wait for the retest of this neck region. Once the market retests it, you look for your candle confirmation and you find your entry. So head and shoulder pattern is a reversal candlestick pattern that tells you that the market is likely to take a sell move from the um from the market is likely to reverse from being a buy market to a selling market. So that is that about head and shoulder and inverse head and shoulder. So the next thing I want us to look at is double top and double bottom. There are a lot of them. Okay, this flag I talked about, some textbook may refer to it as ascending and descending wedge. So the name actually does not matter. What is important is your ability to recognize them and also your ability to apply them on your trading. So that's that about that. I said we'll talk about double top and double bottom. They are not new to all. This is how it looks like. Okay, this is double bottom, or some people may call it W pattern, and then this is double top, which some people may call an M pattern. Okay, so that is that about chart pattern. There are a lot of them, but this is basically the ones I work with most times. I don't want to bore you with all of those candlestick patterns and all. So this is just basically the ones I work with. Now, what I want us to do right now is to open our chart and then do some basic analysis. Okay, this is the chart of step index. Now, when you open your chart, the first you want to do is to go to the higher time frame. And when you talk about your higher time frame, it's either you're looking at the 4-hour time frame or the daily time frame. Now, I am a day trader. What do I mean by that? I hold my position with my position in trading is within 24 hours. Okay, sometimes it's less. So that means that I can actually focus on the 4-hour. But if you're the type that holds your trade for complete 1 day or 2 day, you can start your higher time frame from the daily. But most times I use the 4-hour as my higher time frame. Okay, so you go to the 4-hour to check what the market is doing overall. So this is the 4-hour chart, and as you can see clearly, the market is actually very, very bearish on the 4-hour. All right. So the first thing you want to do is to identify the recent market range. For those of you who have been following up in the class, whatever I'm saying right now should not be a new thing for you. You mark the recent higher, the recent market range. So this particular point, I'm going to call it my H4. I'm going to call it my H4 higher low, sorry, lower high. Okay, then I'm going to call this particular point here H4 lower low. Now you have identified your recent market range. We talked about expectational order flow. Okay, what does that mean? For every impulsive move, there is what? A corresponding corrective move. That is one of the basic law of price action that we discussed in our class. So currently, the market has created a lower low. Now we have a potential pull back to this particular level, which could be, it's actually possible that the market can crash down from here, and it's also possible that the market can come up the way to any level on this particular page to create that higher low before we experience the next push to the downside. But irrespective of what the market decides to do, we've identified our market range. The next thing we want to do right now is to look for entry area. You mark out our support and resistance. And as you can see, this particular level is a good level of support and resistance. Okay, so you can check for the 1 hour as well to see what the market is doing or any other possible place you can. Okay, so this is the 1 hour. You can see that this particular level is a good level. The particular point we marked here, you can see how many times the market is rejecting from there. So that is a possibility that the market can continue to crash down from where it is right now. You go to your 15-minute, which is basically your entry time frame, to see possible area where you want to make entry for. So on the 15-minute as well, you can see that the market is still very bearish. Now you see the market created this lower low on the 15-minute, and it's possible that this can be a potential lower high on the 15-minute to create another lower low. So, but you have to open your mind to several areas you think the market can react to on the chart. You have to actually open your mind to it. But this is actually a very good level. It's very possible that the market can come up all the way here. It's very possible that the market can come all the way here and then crash down. But one thing about chart is you never can tell what price is going to do. All you just need is to recognize as many patterns as you can on the chart and then wait for it to play out. If it play out in your favor, that is a good trade. If it doesn't, you have to keep on looking for other areas of entry. So since you've seen this particular point, you can actually scale down to maybe 5 minutes as well. The lower you go, the tighter your stop loss, but the lesser the solid information you have. So you can come to 5 minutes to also look for other areas or other entry level you think the market can actually make a move from. So, but currently right now, what I'm expecting this price to do is for market to come up to this particular level here, and then take a move to this particular point. So right now, if I am making an entry from this point, if this is my entry area, my stop loss is going to be, depending on the type of candle that I'm seeing, most times my stop loss is always above a rejection candle, because when the market comes to this particular point, I don't just want to start selling. I want to wait to have that confirmation. Okay, I want to wait to have that confirmation. Now, another thing I consider is look at this particular level. If I'm entering from here, if I'm entering from this from this particular point here, look at this candle. I want my stop loss to be probably above that part. If you trace this horizontal line, if you trace this horizontal line here, you can see that this is where my stop loss is. I want my stop loss to be above this candle. That means that if actually you are entering this trade from here, for those of you who might be using a buy limit, pending order, whether sell limit or thereabout, you can set your sell limit, and then instead of asking where should you put your stop loss, you have to just look at this particular line. Look at this red line. This red line represents the value of this stop loss. So all you just need to do is to copy whatever you're saying here and replicate it on your MT5. So that's that about that. This will help those that are in the signal group anyway. But then if you are doing your analysis, after you must have checked your entry time, your market trend from the higher time frame, you come down to the lower time frame to look for what entry. And once you have seen your candlestick confirmation, just make your entry. There's no point of you being scared or trying to check if or predict what is going to happen next. No, there's no point of you trying to predict what will happen or what the price is going to do, because when you are doing that, you will want to force your will into the market, and the market doesn't know what you are doing. You are the one interpreting the information that the market is presenting to you as either being a threat or as an opportunity. So depend on your interpretation. You just have to ensure that you have full understanding of what you're doing. So this is actually, I have no much analysis to do on step index. The most important thing is to identify your trend and then look for good area of support and resistance to check where you think the market will go next. So I believe you guys can hear me.
Yes, I can hear you.
All right, that is good. Okay, so that's about step index. Another thing I want us to look at is okay, let's look at this particular chart. Let me take it to the 4-hour time frame. Okay. Now this is the 4-hour time frame of V51S. One of the things we talked about in our class is how to identify trend reversal, and then we talked about transition as well. Now, when you look at this chart, you will see that the market has been very bearish for a very long time. You can see the market creating series of lower lows, lower high, lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now, this point was the recent lower high rather, that created this lower low. Okay, now what do you see on this time frame? You see that the market has just broken out of the most recent lower low we have. Okay, the market has just broken out of it. So what we have, we can say that this is what a chalk. This is a chalk. And what does that mean? That is a change of character. That is a change of trend that the market is trying to do. Now, I also talked about the fractal nature of market in one of our classes. If you go down to a lower time frame, you will see that before this chalk happened on the 15 minutes, before this chalk happened on the 4-hour time frame, it must have happened on the lower time frame. That is the fractal nature of market, that whatever happens on the higher time frame will first of all start from the lower time frame. So the chart must have happened around here. Now, someone asked me a question about step index. I think that was yesterday. You asked, how am I supposed to know that step index has reversed or you want to start buying? And in a way, I felt he should have known because he has been part of the class. So how you can identify your trend or how you can identify trend reversal is through the knowledge of your market structure. And what part of knowledge of market structure will help you? Your ability to identify change of character, your ability to identify transition in the market. So because of the fact that I have seen the market breaking out of this lower high that created this lower low, because based on expectational order flow, all we just want to see is that after this lower high, we have this lower low, then the market should have just created probably another lower high and then a new lower low. But instead, the market break out of this lower high to create a new higher high. So at this point, I have already seen that the market has reversed. So this was the reason why I dropped a signal on the VIP group for those of you who are there concerning a buy on this particular index V51S. Okay, so what do we do at this junction? All you just need to do is to identify the recent market range. So at this point, I am going to mark here and I'll call it H4 lower low because of course that is what it is. And then this particular point, I'm going to call this point H4 new higher high. Okay, so what I expect this market to do right now, based on expectational order flow, is that the market will actually pull back to any level here and then create a new higher high. Okay, so this is what I'm expecting from it. Now that I have seen the possibility of this thing, now that I've seen where the market is heading to, because the whole idea of going to the higher time frame is to check for the direction of the market. So what is the next thing that I want to do? I want to start looking for area where to take a buy from. Now, one thing you should hold on at the back of your mind is it is not wise for you to be looking for a sell opportunity on a market that is bullish. It doesn't make sense for you to look for a sell opportunity on a market that is bullish. That means that in a bullish market, what you should be concerned of is more of support than resistance. That means that when you are on a bullish market, you should focus more on a support level than on a resistance level. So I will just have to come down to my 1 hour time frame to see good area of support that I can identify. If I'm not seeing any, I can as well scale down to the 15 minutes. And then I can mark out the various level I think the market can react to. So this is actually a good level. This is actually another level. So now that you've marked out the possible area the market can react to, the next thing you want to do is to wait for your candle confirmation on any of this level. Okay, wait for your candle confirmation on any of this level. So what you are saying in essence is you are expecting you're expecting market price to either pull down to this particular level and move to the upward side to create a new higher high. Market should move from here or from here or here. So this is what you are expecting. All right, whichever way, all you just need to do now is exercise patience for market to come to this level and see what kind of reaction is going to give you. Now, the next thing I want to talk about is what type of candlestick are you looking for when taking an entry? Depending on the type of entry that you are looking for, the type of candlestick I especially look for is nothing more than rejection candle. Those are my candlestick confirmations. I've been laying emphasis on that. Deriv or volatilities, basically they respect these rejection candles a lot, and you can see them, they are littered all over the chart. They are littered all over the chart. You can see this. These are the these are the types of candle I want to see on my POI. Once I see rejection candle like this, look at this particular point. Look at this particular point. See how many times the candle rejected here. Look at this rejection candle. And once you see it on the POI, what next are you seeing? You see the market crashing all the way down. See the market crashing all the way down. So they are very, very important on the chart. Look at this particular one as well. If you go down to the 5-minute time frame, this is a perfect rejection candle. And after that, you see the market crashing all the way down. I also talked about chart patterns, right? I talked about M or double top. This is an M pattern. You can see this is 1 and 2. This is double top, and you see the market crashing all the way down. Now, if you are looking for a buy opportunity, this is another rejection candle for a buy. This is another rejection candle for a buy. I immediately see this rejection candle. Although, if I see this type of candle, I can actually decide to go down to as low as 5 minutes or 10 minutes, because since the candle closes bearish, I will have to be patient enough to see what the next candle will look like. I don't have much information on this guy. Okay, yeah, this is what I'm actually looking for. All right, now look at this. Now look at this. Look at this candle. Look at this candle. Do you see how perfect this rejection candle is? So if I want to take a buy, immediately I see this candle on my POI. What do I mean? When I see this candle on my support level, after marking out my POI, the point where I'm willing to take entry from, just like we have marked out, immediately I see this type of candle, I'm going to take my entry. So you can see that after the formation of this candle, look at how the market has been buying since then. Do you see how the market has been buying? Look at another one. Immediately after this rejection candle, what next do you see? You see how the market has been rallying to the upward side. You see how the market has been rallying to the upward side. Now, look at another rejection. This is also for this type of rejection is when you want to take a sell on the market. And immediately you see this rejection, what happened? You see the market crashing to the downside. But meanwhile, if you are on a buy, there's no point of you looking for rejection for a sell. If you are on a buying market, look for a rejection candle that is giving you signs for you to take a buy. All right, like I've said, if you are in a bullish market, it makes no sense looking for where to sell. There's no point of you thinking of where the market will reverse from. Follow the trend. Okay, I've seen some of you asking me, I think the market wants to start reversing. Before you know reversal, before you talk about reversal, make sure you check for transition. What are you saying? Not just because of you say one reason you think the market should reverse. No, before you can say the market is reversing, make sure that you're seeing a change of character, the market breaking structure to the opposite direction, and then you can now conclude that it is possible that the market is actually reversing. So I hope today's class has been very, very helpful, and you guys have learned something new and something that will definitely help you in your analysis. So what I encourage you guys to do is try as much as you can to practicalize whatever you have learned. Don't be dumb. I know there are some of you that the only time you open your chart again is probably maybe when you have class like this. Practice on your own. It is not only when you are trading. On your own, make it a daily habit. Open your chart. What have you learned? Practicalize it. Send analysis to the group. Okay, if I see the analysis you guys are sending to the group, it will be easy for me to make recommendation. It will be easy for me to make correction and all. I don't want to make an assumption that everybody have the same level of understanding. So when you do analysis, don't send it to my DM, send it to the general group so that others can actually learn from what you are doing. So this is where we'll be stopping for tonight. If you have any question, it's time for you to unmute your mic and then I will take them. If you have any question, it's time for you to ask. Is there any question so far? Okay. In the absence of no question, we're going to call it a day.